So how do we judge if a market is in a bull market or a bear market, or more importantly, what regime it might be changing to, whether it's going to turn bearish or bullish? Well, I'm going to give you some insight here as to how I like to identify short, mid, and longer term trends. In front of you, you have the percentage of stocks above the 20-day moving average in white, the percentage of stocks above the 50-day moving average in orange, and then the percent of stocks above the 200 daily moving average in blue, cyan, whatever color you want to denominate it as. What we're seeing at the moment is that we're actually at quite an extreme level for the 20-day moving average of stocks. You can see that back in July when we fell off, similar happened. Stocks, the 20-day moving average was up here at about 70+%. You can see that at the start of the year when we fell off as well, we were up again, this was 2022. We were up at here's the start of the year. Sorry, my apologies. We were up, above 70% again, actually extending all the way to almost 90%, which is pretty crazy. At the same time, concurrently, we had the 50-day and also the 200-day very, very high as well. Now we're seeing a bit of a discrepancy here where the 200-day is very, very flat. And in my view, what we're seeing with that is to do with the Russell. So the Russell actually has lots of firms that aren't making any money in it. This is part of the predominantly the S&P 500, but as we know, Magnificent Seven make up 30% of the movement of the S&P 500 anyway. So interest rates are biting basically, which is, I think, keeping the percentage of the 200 daily moving average of stocks lower relative to history. But I think this is a bit of a bearish signal here. I think what we're looking at in the shorter term, at least, is, as I mentioned earlier today, stocks to start to get dampened. And this is a fantastic way that you can use to judge whereabouts we're at in the timeline.